Leading the Dow today was Walgreens, while Cisco was the biggest laggard. Over on the S&P, it was L3 Technologies that was the biggest winner, and Occidental Petroleum was the biggest decliner. Mike, how would you characterize this market move today, especially coming into the close here?
You know, first of all, pretty typical of this kind of market after you have one of these volatility shocks. The trading is very apprehensive. All rallies are suspect. Traders don't want to make the first move, or, you know, they remember that the second mouse gets the cheese, and we saw that. This rally attempt at 245 kind of went nowhere, right? People thought maybe it was going to be a rerun of Friday, and not. I think that the weakness in the large cap growth stocks, the NASDAQ all day, weighed on things. I don't think you really can make any determination from today as to where we're headed right here, except to say that I think that it's going to remain a little bit tentative for a little while until we get some kind of sense of how the market's going to respond to those earnings reports.
Mike, in terms of what we saw around the rest of the world, was a little bit more resilient than Asia.
Yeah.
Sort of Europe in between as well.
Yeah, it wasn't really giving you any clear leadership. I mean, during the course of the day, I was just looking at the emerging markets ETF here, and it was weak, so it didn't give you a green light to say that that's cleared up necessarily.
Kari, taking a look at the fact that tech stocks were some of the biggest laggards again today, does this concern you, especially given the fact that we have seen selling in some of these big cap tech names, and this has been the sector that's outperformed in this bull market in recent years?
Well, the tech sector has obviously been the place where it's the most challenging right now. We've seen since the beginning of the quarter, meaning the beginning of October, technology stocks are down 7%. And until we see some earnings, and I would expect that earnings will be strong for a number of them, you can't really imagine that they're going to start to outperform. This is, as Mike said, a continuation of what we've seen. People are trying to become comfortable for the level of the market. But if you consider that over the last year, we've had a number of sectors. As a matter of fact, if we looked at the percent of the S&P that is down more than 10% from its recent high, it's 60% of all S&P stocks are down 10%. If it's 15%, that's 40% of S&P names are down 15%. So there have been these rolling bear markets that have converged here. And what we're waiting for is the market to become just comfortable with buying again. And there was nothing today that the market became comfortable with. We have to wait and see whether Netflix report good earnings and some other high-profile companies, and then we might start to get that bottom set from which we can begin to go higher.
Mike, the market was comfortable with the Russell today, the smaller caps. So what's that down to?
Honestly, I think it was just like the most beaten up stuff did get a lift today. And actually, even the equal weighted S&P 500, so when every stock has the same vote, was up today by about 0.25%, at least right before the close. So it shows you that really it was the weight of financials not trading well, but also really the big cap growth stocks that do drive the index. And that's been the fix I think the market is in. Because if those stocks are going to be kind of a source of funds, people taking lots of profits in that, it just makes the index stuck for a while.